Indonesia's official presidential election results are not out until July 20th, but in an early count, it looks like Joko Widodo has won the battle. However, his rival is also claiming victory. I'm joined on the line by Maguire, Chief Economist for Asia Pacific at ANZ in Singapore. So Glenn, what are your views on this news, and what sort of an impact will Widodo's leadership have on the country's economy?
Well, we are in a little bit of a period of uncertainty given both presidential candidates have claimed victory. All the quick counts did point to a Jokowi victory. Only two narrowly suggested a Prabowo victory. And markets appear to have largely overlooked that this morning. Markets were quite enamoured with Jokowi as a candidate. He was viewed as a political breath of fresh air who would improve the political process and transparency in Indonesia and reduce corruption. And what we've seen with his 6 percentage point margin in most polls is that investors have been very keen buyers of Indonesian assets last night and this morning, and that reflects a degree of optimism on the economic outlook. Now, apart from the atmospherics about Jokowi being sort of a breath of fresh air who will sort of usher in new and better political processes in Indonesia, we have to recognise that both candidates did run on a fairly strong nationalistic agenda, and that reflects the demographic endowments of the Indonesian economy. There are up to 67 million voters who are voting for the first time in this election, given their youthful age. So it's not surprising both candidates presented very nationalistic Indonesia first policies to the electorate. So through that prism, what we're likely to see is a policy that's aimed at building out the productive capacity of the Indonesian economy. So we would expect to see some fostering of investment in infrastructure under Jokowi. We'd also expect to see Indonesia perhaps trying to move up the value-added chain and enjoy some of the technological and capital output of that foreign direct investment a little bit more itself. But I think what we're likely to see is Jokowi will be moving to reform fiscal subsidies, particularly for food and energy, which are very, very large, and try and translate some of that into more efficient investment in infrastructure spending to boost the productive capacity of the economy.
You mentioned a bullish market reaction. So do you think the Indonesian rupiah will continue to strengthen?
Well, we expect it will continue to strengthen at this stage. I think, there is a degree of optimism. There have been significant inflows into Indonesian assets at this stage. However, what we are likely to see is Bank Indonesia is going to be watching the FX markets. And if we do see some undue strengthening or too much optimism reflected in the rupiah, they are likely to smooth some of that intervention. One of the concerns we do have is that a Jokowi presidency is likely to lead to some erosion in the budget deficit, given his big investment and infrastructure plans. And the rationalisation of food and energy subsidies is also likely to be picking up inflation. You could also see some widening of the trade deficit and the current account deficit under a Jokowi presidency, as a lot of the capital goods and imports are imported. And that would suggest that Indonesia could potentially be seeing its current account and its budget deficit widen as we move into 2015 and move towards the beginning of the Fed rate hike cycle. And if that was the case, then we would expect to see some capital outflows, not to the same extent we saw over 2013. And I think that's probably likely to lead to an eventual reversal of the rupiah, which on a 12-month view, we'd probably see weakening again to 12,500.
And speaking about interest rates and inflation, some believe the interest rate is not enough to handle inflation. Indonesia had never experienced inflation of more than 5% until 2013. So Glenn, what sort of actions are you expecting to see to combat inflation?
At this stage, we need to watch and see what happens with fiscal policy. And in Indonesia, around 1/3 of all government expenditure is actually supporting subsidies for food and energy. It's a very inefficient setting of fiscal policy at this stage. Jokowi is challenged with unwinding that, and in reducing subsidies, he will be pushing up the prices of food and energy domestically. That could see inflation expectations start to rise, particularly if it is accompanied by cash handouts, which we've seen previously in Indonesia when food and fuel subsidies have been reduced. Now, if that was the case, then we'd expect Bank Indonesia would take a more prudent approach to monetary policy, being careful to guard against a deterioration in inflation expectations, and we think the risk is Bank Indonesia resumes its tightening cycle either in Q4 this year or Q1 2015.
Indonesia last week sold its first bond in euros. Do you expect the deals will pave the way for more Eurobond issuances out of Asia?
It was interesting that Indonesia did launch its first bond issuance denominated in euro last week. I think it is a dynamic many Asian debt underwriters and governments will be watching, and the key reason for it is Asian economies see a lot of volatility in the US dollar. Most of the imports of food and energy that Asian economies face are denominated in US dollar prices, and you do tend to see fairly large cycles there, whereas what the Asian sort of debt underwriters and policymakers have observed is the euro appears to be a little bit more stable, and even in the depths of the euro debt crisis, we didn't see a significant weakening of the euro. So I think as they move to attract more buyers of their bonds, you are likely to see Asian debt underwriters and governments beginning to issue more debt and more bonds in euro over the course of coming years.
Glenn, it was a pleasure speaking to you today. Well, viewers, do stay tuned as we have plenty more just like this heading your way. See you very soon.